Hi everyone. Sorry, I'm still in a bit of a panic. My dog ran out and chased my poor hens around, so I had to rescue them, including one that jumped over the fence to a neighbor's yard. That was thrilling, but all the chickens are fine and in one piece. So, with that important anecdote set aside, I've got the VIX up here just because it's just been amazing how this thing has been plunging. It got into the 16s today. I mean, these are levels not seen since like May 2008, before Bernie Madoff, before the economic collapse, before everything. I mean, there's like, prehistoric level VIX here. So, really, really something. But I was a bit relieved because considering the what happened Friday and the complete shrugging of shoulders about the jobs losses and so forth, you would think that Monday would have a lot of momentum to really push things higher. And I was agonizing, just like you can't believe, all weekend, thinking about going into some very big long positions with like the Ultra Bull on the Russell, things like that. Thank goodness that I decided not to, because things got pretty squishy today. Instead of going through the indexes today, I was going to do something a little bit different. I spent pretty much the whole day going through hundreds and hundreds and hundreds of charts, and I've called out some bullish but a lot more bearish potential positions, and I just wanted to thumb through them in the short amount of time we've got. Some I'll just zip right through, others I'll spend a moment on. You'll see some commonality to a lot of these. What you'll usually see, and I'm just going to go through what I call my bear pin watch list here. That is, things I'm thinking of shorting. The common elements you'll typically see are, a very sharp rise in price, and more importantly, a very small amount of wiggle room to the stop price. In other words, on most of these positions, the amount I'll let the position move against me is just going to be this very small, maybe 4%, in exchange for a very substantial potential drop. That is a rise in a short position. And the other common element you'll see with a lot of these is that in many cases they were down today, even just a little bit. I like to see some weakness as I'm, before they sort of make the cut. Some were weaker than others. And some merit a pause and others don't merit much commentary. But I'm just going to go through these swiftly here. Some of these have very large, what I'm hoping are topping patterns. You've got this absolutely tremendous dome, the plunge, and this retracement. Just to beat a very dead horse, I'm really not expecting, at least for a long time, us to break the lows we saw last March. But in terms of a 25 to 30% drop sometime this year, I'm open to that possibility, and particularly for some issues, a drop more substantial than that. Maybe we should have some incidental music here as I'm going through these, because, as I said, not a lot of these merit commentary. One thing I want to point out is that I don't necessarily want to short things that have been extraordinarily strong. In some cases, I do. I would love to short some of those items that have had the largest gains. But in other cases, the mere fact that a stock is still relatively battered sort of speaks well to its bearish potential. American Airlines here being a fitting example. I mean, unlike some stocks, like, say, Apple and Google, which are, well, Apple in particular, near lifetime highs, a stock like this is still a shadow of its former self, and perhaps for good reason. This isn't on my list, but like another instance is like Electronic Arts. This is a stock, when you look at it, you figure the life's been just totally beaten out of it already. But I notice after hours, right this second, it's down another 8%. So weakness often begets more weakness. Here is as an alternate example of something which is near its lifetime highs. But what I like about a stock like this is that it's in a zone here that is the 21-ish type area, where it seems to be very prone to weakness. So once again, the amount of potential drop, which is, God knows how far, is much, much greater than the amount of price movement that would be required for me to throw my hands up and surrender. In this case, like crossing 21.60, I'd be out of there instantly, which isn't far away at all from its current price. So it's risk versus reward. Here it is. We're over halfway through the video. I'm still in the A's, so you can see that we're not going to get too far. Maybe I'll pick up the pace and just stop on the most interesting ones. AZZ. This one's quite interesting to me. I've been watching this pattern for a while, and it's already lost some amount of ground. On Friday, it lost quite a bit, but that's a pretty compelling pattern. Barclays, I've had success with in the recent past. I actually covered a short in this position a couple of weeks ago, and it's getting up into the area where it's interesting to me again. And here again, we see a very, very substantial rounding pattern. Here's another different flavor of that same idea of a big top, where you have a series of lower highs. You can see here that after this large top was broken and retraced, its attempts to move back to that level have been getting weaker and weaker, and that's precisely what I would like to see, because it indicates kind of a broken stock which is losing its gumption to push higher, and secondly, as with all these instances, it gives me a nice clean stop price because I'm a stop aficionado. In this particular instance, BVN, I would set my stop at like 39.76, which is just above the high back here on October 14, as my stop point. We're going to get to the C's here. Maybe by the time this is done, we'll get to the F's. Who knows? I'll just keep thumbing through. This is another kind of flavor of shorts that I like, which is the big busted trend line. So here's this big old, like nearly decade-long trend line. We have a fall and a big retracement to the underside, and relatively low risk, high reward yet again. Cracker Barrel, not my favorite there, but still in the bear pen, thinking about it. Let's see, CERN. This one is more speculative because, let's face it, it has been very strong, although today it lost a couple of percent. This one is more of kind of a flyer, I guess they would call it, whereas you've got a stop price which is just a couple of percent away, but it's gone so far so fast here from like 30 to 90 that it's kind of just worth a shot just to kind of see how that goes. And these gap fillers here I also find kind of interesting. Here's CF, which had this gap set way back in September of 08 and has spent a lifetime kind of repairing the damage, and now at long last it's finally back there. And so quite obviously this line here would be my just above that would be my stop price. In this instance, the stop would be 102.98. CSIQ, I'm not so sure. This has been just a real dynamo. I'm just kind of keeping an eye on that. I'm a little scared to short that one. A lot of these green tech ones have been just astonishingly strong. Like one, this is not on my short candidates list, but this one's CREE. I didn't even know what they did, but I was so intrigued by this performance. This, like, you could put a ruler on that. It's just straight up, what on earth do these people do? And they sell, they're in the green tech. They've got like LED based lights and other spiffy gizmos, which I guess are a great story stock these days. So it's gone from like $12.50 to nearly $60, just a phenomenon. And then just a couple of D's here, DRI, DRQ. A lot of the energy stocks are kind of vulnerable now that crude oil. And we'll just wrap it up with this one, EBIX. Sort of kind of head and shoulders in the making here. Not a slam dunk. I mean, but again, this isn't things that I'm absolutely going to short. This is my bear pin watch list, just kind of thinking about them. So, all right. Well, that's probably enough for me today. And we've got next week is a shortened week, and Monday will be a holiday, I'm pretty sure. And not a whole ton of reports this week. I'll go Thursday is retail, so that should be kind of interesting. So that'll be enough for me. I'm done for the day, and I bid you a good evening, and I will see you on Tuesday morning.